The current economy is changing rapidly. We have seen almost every stock in the market double or triple in price last year, and now almost every stock has been cut in half. But let me tell you, I've never been so confident in the stock market as I am right now, and I want to share with you what I did to become a confident investor going into 2023. For those of you I haven't met before, my name is Jonny Oswald. I've been investing for almost 5 years now, and I've doubled my money on several companies as a 23-year-old, which goes back to even before the pandemic. So these gains did not come only because of the major moves we saw in 2021. But as someone who has gone through a recession before, I wanted to share how I've been so confident with my investments for this upcoming year. When we look at this past year, we have seen many companies get their valuations cut in half. And while we saw some companies get absolutely destroyed, I was buying companies who already had their valuations cut drastically in 2021. And when I look at a company like SG Blocks, I see a company who not only has continued to improve on their overall business in the safe and green construction for affordable housing and a variety of other structures, but this company is beating the market significantly year to date. And for a while, this company was up. Yes, you heard me correctly. This company was up year to date as the indices were down 15 to 25%. I've looked for solid companies that have already gotten hit because I know down the road, if companies continue to struggle, my stocks won't be as badly affected. And this is why if you look at the companies that I'm in, even though several of them have gotten absolutely decimated, their competitors have gotten hit much worse. So knowing that my companies have already gotten hit brings me tremendous confidence that it is going to take a lot to move these companies down further. The problem that I'm seeing with many investors and honestly several people on Wall Street is that they are following the trends rather than doing the research and seeing where the trends are going. A good example of this is Jim Cramer announcing a few days ago that he doesn't like Nvidia at current share prices. The issue with this comment was that he loved the company when they were near all-time highs, but now that they have had their valuation cut in half, he is now a seller. We see this a lot of times with analysts where they cut their price targets because of what is happening in the short term. So don't be someone who follows the trends, but look at where these trends are going to be moving forward. When it came to SG Blocks, their valuation dropped over 60% in 2021, and there wasn't anything major that affected their business. When I looked at this company going into 2022, there was no question I was going to add shares, and I've dropped my cost basis to under $2. So even though many people are down on every single position, this company has actually allowed me to not get hit as badly as other investors. The second thing that has made me confident in my investments is that I know the companies like the back of my hand. I cannot stress this enough. There was a time early in my investing career where I got absolutely wrecked because I did not pick companies that I truly understood. I was simply in them because other people were in them, and what that led me to do was sell out based on emotion. If I would have taken the time to understand the business model and know the products and industries that they were in, then either A, I would have stayed in them for the long term, or B, I wouldn't have bought the company in the first place. So I needed to spend time understanding these companies because think about it this way. The money that I'm putting into these companies is money that I've made from my job. I needed to work in order to invest what I have. So if my money went to zero, then there goes my ability to provide for my family in the future. So if I wanted to be a confident investor, I needed to be confident in my individual investments. And this leads to the third element, which is that I treated my investing portfolios like it was a business. Not only should I know the companies well, but buying companies, in my opinion, is like hiring employees. I told myself that I'm the CEO of my investments and I need to choose who I want handling my money. Because if I'm an owner of a company, I'm not going to hire people that I don't like or can't agree with. That would be foolish. So what I've done is treat their conference call like it was an interview. I interviewed their management team to see if they would be a good fit for my team. If I don't like the management team or I can't understand how they will grow their company to help me as a shareholder, then there's no reason for me to buy this company. Now, conference calls are just one aspect of the hiring process. I'm also looking at the shareholder letters, investor presentations, 10Qs, and 10Ks because I want them to prove to me why I should give them my money. Lastly, I looked at how they're being perceived by examining articles and reports that other people have done. If I find that others view this company in a negative light and it is justified, then I need to consider that when I go to hire them. Are they trustworthy? Do they do what they said they were going to do? These questions are extremely important when it comes to hiring someone for a business, so why not do the same thing for my investing business? The fourth thing that has made me extremely confident going into 2023 is that I know the industries that I'm investing in. In my eyes, it is one thing to know a company, but it is a completely other thing to look at the industry and see where it's going in the next 3, 5, or even 10 years. It wouldn't make sense for me to pick a company that is in an industry that is on the decline. Even for a company like Honest, many people would say that the diaper and wipes business is already solidified and there isn't much growth left. But my pushback is that Honest is more focused on clean and natural living. When I look at this past decade going into this one, I've seen a major shift into clean eating and living. So the sector of natural products are going to continue to grow for a long time. So I needed to know if the industries I'm investing in are actually going to grow and how my companies I'm investing in are truly going to make their mark in that industry. The last piece of the puzzle that has helped make me a confident investor is the way that I diversified my portfolio. Now, for transparency, this took a lot of time for me to figure out because understanding my risk tolerance is not something that I just knew when I first started investing. I needed to take risk and then see how I felt. At the end of 2020, I recognized that even though I had some great wins, I also was getting out of my comfort zone by taking on risky stocks. So in 2021, I took a lot of time rebalancing my portfolio, and based on my past few years of investing experience, I asked myself the question, how much money am I willing to place in this company? In other words, I evaluated each stock in my portfolio, and some of them I did not have a good enough reason to actually have a position, so I sold out. It wasn't because the company was bad per se, but I didn't have a good enough understanding of the company's business to where I could actually hire them into my investing business. At the same time, I got a good idea in terms of what my strongest conviction plays are and which ones aren't. Because using the analogy of investing like a business, I need to understand certain people that I would hire. I'm anticipating some of them to move up in the ranks, and so I will put much more time and energy into them. In other cases, I know that an individual may be good, but they may not have the same potential, so I needed to view stocks in the same way. There are certain companies that I have complete confidence in that have tremendous potential. Other companies may have solid potential, but a good amount of risk. So even though I talk about companies like Shift and Opendoor a lot on my channel, they are only a small portion of my overall portfolio because I know the risks that come along with the used car e-commerce sector as well as the current real estate market that we are in. But after taking 4 years of my investing experience to work on my risk tolerance, I actually made a spreadsheet for what I felt would be the best diversification for me. So if you're interested in seeing how I diversify my portfolios from a percentage standpoint, click the link down below. It's completely free and it includes portfolios with 4 stocks all the way up to 10. I hope that this is helpful, and if you have any questions, feel free to leave a comment down below. Now, speaking of diversifying, it took several years for me to know my risk tolerance and learn how to evaluate companies not just from a financial perspective, but from a business perspective as well. However, applying these things over the past year and a half has put me in a position where I've never felt so confident in the stock market. Yes, the stock market could continue to experience extreme downward pressure, especially if we see inflation remain high and company earnings drop. But when I look at the companies I'm invested in, I've spent a good amount of time in the hiring process to where despite their low valuations and continued drops in price, I'm in a position where my cost basis for each company is extremely lower than I expected. And these industries are going to be growing rapidly for the next decade. And those are the reasons why I'm a confident investor. Hope you all enjoyed this video, and if you did, smash that like button down below. That helps me in a massive way. And I would love to hear your thoughts on what it takes to be a confident investor. So let me know in the comments down below. Also, if you're new here, hit that subscribe button and notification bell. That way you're notified when new content comes out. Hope you all enjoy the rest of your week, and I'll see you in the next one.